While oil prices are making a bit of a rebound this week, they continue to linger in record low territory due to oversupply in the market. But just how big is the glut? Wall Street Journal reports that as many as 800,000 barrels of oil a day are unaccounted for. Here to discuss the mystery of the missing oil is Wall Street Journal reporter Georgi Kantchev from our London bureau. Good to see you, Georgi.
Good to see you too.
So how do 800,000 barrels of oil go just completely missing? Isn't that watched for? Isn't that monitored very closely?
Yes, it is monitored pretty closely. The International Energy Agency, which is a top global monitor, is looking at supply and demand. But this data is based on estimates. So, for example, last year, it estimated that on a daily basis, there's 2 million barrels a day more supply than there's demand for. Now, out of these 2 million, roughly 2 million, about 1.1 million barrels a day are accounted for. These are in storage or in transit, in pipelines. And at least about 800,000, which we don't know where they are. Now, it doesn't mean that these are necessarily non-existent barrels. They could be in places that the IEA doesn't monitor. It could be in China, could be in other countries. But the IEA also says that they, and they're very transparent about it, they say that they could be overestimating supply or underestimating demand, meaning some of these barrels could actually be, they couldn't be real. And that leaves the oversupply, which we think it's 2 million barrels a day, actually could be smaller.
Wow, so we don't know if these barrels even exist, or they might be stored, let's say, in China or somewhere we can't monitor. Have barrels of oil gone missing before, or is this a new phenomenon?
Yeah, they have been missing before. In the 90s, for example, 1998, the last time there was such a big chunk of missing barrels, the U.S. Senate opened the investigation, and they asked a U.S. government agency to look into the data, and the agency found that statistical limitations lead to errors in such data, and these errors, they persist until today. It's due to the fact that the IEA and other agencies are working with estimates, not with actual data when it comes to supply and demand, and this could lead to these discrepancies.
Well, it's particularly troublesome right now because oil prices have hit historic lows on the premise of oversupply. So how much does 800,000 barrels missing impact supply and ultimately impact oil prices?
It could have an impact because even though the global oil market is about 96 million barrels a day, the oversupply, it was assumed that it's about 2 million barrels a day last year. And now if 800,000 barrels of this, or a sizable portion of that, is not real, means the oversupply is much smaller, then prices could rebound faster. Now, they have rebounded in the past few weeks since the lows in February for different reasons. They had to do more with hopes that big producers will come together and limit their output. But the fact here is that the oversupply estimates might be wrong.
What are the lessons here for investors, Georgi?
Right. Lessons for investors. Some of them know that, and I think people we talk to, they say that they don't look to the precise numbers exactly due to the fact that these are estimates, this is incomplete data, and one investors call it an imperfect science, but they look to trends. And when you look at the trend, it's evident that in the past 2 years we had a sizable oversupply. Whether it's 2 million or 1 million barrels a day, it's a big oversupply, and that has led to prices falling so fast and so low.
All right, Georgi, thank you so much.